What's up, guys? Welcome to the Momentum Trading Lab. I'm your host, Renier. Please remember to hit that like and subscribe, and let's get into it. All right, guys. So in today's stream, we're gonna do the higher time frame analysis on the dollar, the Nasdaq, ES1, and Bitcoin, and then have a quick look at the economic calendar for the rest of the week. We have some high impact stuff for the rest of the week going on. And then we'll quickly do a recap on the market, what happened during the morning session. And then we'll go into the lower term time frames, the 1 hour, the 15-minute, and the 5-minute for all of the assets that we discussed on the higher term time frame. Try and figure out what is likely to happen. And then I might stay on for the entire PM session and see if we can hit some trades. And then just before the start of the kill zone, I'm quickly gonna go through my day trading strategy. One of my friends in the Discord, CryptoCat, he asked basically for some information on what I do for day trading, and I'll say that I'll go through a couple of examples in the stream, and then also share my trading checklist that I use, that I basically fill in and keep as a trading journal. So I'll show you guys how I use that. All right, and then with that being said, let's do the higher time frame analysis, starting with the dollar. Okay, so let's start with a fresh chart. Okay, so previously in the week, we identified the bearish divergence on the RSI and on the Williams as well. And then we also ran up into the relative equal highs, knocked out some of the buy side liquidity. And then we got a bit of a retracement after the liquidity purge into this fair value gap. So let's quickly fill that in. Okay, so we came right almost just past the midpoint. And then we have another one right here, and this one is in between that equilibrium and the Fibonacci 618, so squeezed right into that area. So I still think it's likely the dollar retraces into this area. We are in the middle of the week now, so we'll see what happens during the rest of the week. This could potentially happen next week, the retrace into this area, and then the continuation to the upside. Okay, so on the oscillators on the daily, still looks like it can move to the downside towards the 618, then rebalance this fair value gap. Daily. Okay, and then like we said, it came into the buy side liquidity. Okay, so that has been taken. So now we can kind of expect, so as we can see, this is still in the premium range for this leg to the upside. So it seems likely we will need to come back into a discount after we took the buy side liquidity. Still definitely in bullish market structure on the daily. Over here we had a break of this low, but this was just a liquidity grab of the sell stops below this low, and then we got the displacement to the upside. So overall it still looks bullish on the Dixie chart, but I think we could expect the retrace to around the 618 is at 103.784. So look at the 4 hour. Okay, this was the imbalance that I mentioned in the Discord in my channel. It's likely we'll see a move into this fair value gap, and we came into it twice now. So over here there's relative equal lows, So a lot of traders will see this kind of as a trend line support. So we can assume that the sell stops is building up below these lows. So it seems likely they could come and purge these lows and then potentially get a leg up and then continue down to fill the imbalance over here on the daily chart. Right, on the oscillator, looks like it's flipping bearish. The Williams is showing a little bit of indecision as well as the normalized MACD. Okay, so we have these relative equal lows. So we have liquidity right here. Okay, so these gray boxes are the daily imbalances. Then we have one here on the 4-hour that has not been touched yet. Let's make this blue. Yeah, so this normally tends to play out when you have these equal lows. I'm gonna quickly fix this. When you have these relative equal lows and an imbalance below that, then this imbalance acts as a pretty strong magnet for price action to move towards. And like we said on the daily, it seems that this area needs to be rebalanced, and then the liquidity built up below these lows and this imbalance could be the start of the larger leg to the downside into this imbalance. So they came into that one towards the midpoint, and then there was another small one that the dollar could not close above. It just wicked through it. And then we have a high right here in this fair value gap. So we can assume that there was a bolt up buy stop liquidity above this high. So they took the buy side, and now it is likely that it will go and take the sell side liquidity and move towards this imbalance. So this is also a signal that we could expect a little bit of a retrace to the downside. Have a look at the 1 hour. In the 1 hour, see how we have these wicks inside of that imbalance. Use this. So that wick was just the to basically purge the buy stops, and you can see the strong reaction that we had to the downside, which is could be an indication that larger players bought up these buy stops, and now obviously they would want to pair their short positions with the liquidity below these lows. That's why I think we could see a move towards this area, towards the blue box. Very messy, but still you can see how we are getting rejected right there, and then we have the little purge right there. So this is an indication that it looks like price wants to go to the downside. Quickly have a look at the and not really any divergences, but everything is pointing to the downside. Okay, this is pretty messy price action on the 15-minute. Also came just right into that little gap that we discussed in yesterday's stream. Okay, so pretty messy on the 15. So I think we'll stop the Dixie analysis on the 1 hour. I think the picture is pretty clear. We took the buy side. So price action tends to move from buy side to sell side, and the sell side liquidity is below these lows right now. Make that line a little thicker. So to me, it seems likely we come in the near term, just come into this area, and then on the longer term time frame, it seems like we will eventually gravitate towards this area before making another push to the upside. Okay, that's the dollar. Let's have a look at the Nasdaq. Okay, let's have a look at the momentum master. Okay, money flow came down quite a lot from yesterday, pointing to the upside. Looks like everything is starting to curve back to the upside. And that's kind of in confluence with what we see on the dollar index. Looks like the dollar index still needs to come down a little bit more. And it looks like on the higher than time frame, the Nasdaq wants to push up towards the liquidity above these relative equal highs. And then we still have this volume imbalance right there. That will have to be rebalanced at some point in the future. Make that gray. This is a volume imbalance. So some of you will remember this little rejection that we had right there was exactly from the volume imbalance that we had right there. Came right to it, got rejected. I'm keeping an eye on that level for somewhere in the future. This will obviously also act as a magnet for price action, as well as the liquidity that we have right here. So price action tends to move towards liquidity or imbalances. And over here, we have a built up liquidity as well as a volume imbalance right there. So it seems likely that in the coming weeks, we expand to the upside to take out that liquidity and rebalance that area. With this little leg to the upside, we also got the retrace into the discount area, into the discount. And you can see it, we got a strong reaction from the equilibrium, showing that it doesn't really want to go down. It wants to push to the upside. So this is the equal highs with the buy side liquidity above this high. And then we had this small imbalance right there that I'm going to put back on the chart. Kind of struggling right there, so I'm just going to keep this. Okay, let's have a look at the 4 hour. Okay, so this morning we had a look at this imbalance. Grab that. Okay, so this was from this morning. What basically happened is during the CPI, when the CPI data came out, they immediately smashed it into the sell side liquidity right here, and then got a strong reaction to the upside, and we had a fair value gap on the 4 hour and the 1 hour. So it seemed likely that they would gravitate it towards that area, and then we move towards it. Now it looks like we are trying to break through it. I'm just gonna set this so it only shows up on the daily. Okay, so that was that little imbalance. We moved from about there all the way to it. It looks like this is going to be an inversion fair value gap. So at some point, this might act as support when price action retraces back into this area. Okay, so sell side taken. So price action moves from sell side to buy side, and also from moves to imbalances and liquidity. So we took out this imbalance. So it seems this will be the next draw on liquidity. You can see it. We took out this sell side. Now it looks like we are displacing to the upside, telling us that a larger player, a market maker, or whatever you want to call it, bought up all of the sell stops, and now they want to pair their positions with the buy stop above these highs. So we have the buy side at 15,696 relative equal highs. Okay, so I'm just going to be watching those levels for now. It seems that after we took this sell side and we are displacing to the upside, that the targets or the drawn liquidity is towards these highs. We'll see once we get to this high. Are we just gonna tap into it to knock out liquidity and then displace to the downside, or are we gonna continue and take out these highs before getting the displacement to the downside and getting a little bit of a leg down again before another potential push to the upside? Okay. 4 hour. Most of the oscillators are pushing to the upside. The only kind of sort of bearish sign is the fact that the money flow is above the RSI and not below it. But there's more bullishness on the oscillators than bearishness. And then also, obviously, the draw on liquidity is to the upside, it seems, because we took the sell side and we are breaking through this fair value gap, which could means that this is going to be an inversion fair value gap. So this could act as support in the future. Also one right there. I just want to have this on my chart. This imbalance right there. Okay, let's have a look at the one. Pretty messy. Breaking through that one right there. We'll look at the 15. Struggling right here. Okay, so there's some relative equal highs, so that this might be inducing more buy side liquidity. So if traders starts to see this as resistance and they go short, they will put their stop losses above these highs. It's likely the market maker will just run these highs to take out that liquidity. Just quickly want to go back to the daily. I just want to mark off the previous day's high. So we already took the previous day low. So it seems likely we moved towards the previous day high. Then they would have taken out the liquidity on either side. Okay, so let's see. Quickly go to the 5 minute. Okay, so this was the craziness at 8:30 when the CPI data came out. And like we mentioned on the 4 hour, they smashed it right into that sell side liquidity and then kind of pushed it to the upside. So where the open was right here, we got that fake little move up, then down, took out the sell side liquidity that was built up right before the open, started to move to the upside. Now it's making those highs. Go back to the 15. Okay, I still think the drawn liquidity is to the upside. So what we want to see kind of is, so before 2 o'clock when the silver bullet starts, somewhere between now and 2 o'clock, if the drawn liquidity is correct, then we want to see price action take out some of these lower term time frame lows and then displace to the upside, and then we'll enter on the retrace in a fair value gap or an order block, and then we'll run it to the previous day high, basically the liquidity that we identified on the 4 hour chart right there, either that high or that high right there. Quickly go back to the 15. Okay, so what I'm going to do is, okay, so the New York lunchtime hour is basically finished right now, and the PM session kill zone starts in 27 minutes. Okay, so I'm gonna put an alert right there. I want to see how price action reacts when we go past this high. And then the same right here. All right, so then we'll come back and see if this is just a liquidity purge of any trailing stops. Then we'll watch for the displacement to the upside and then enter on a fair value gap. And then the same, we'll just see how it reacts when it passes one of these levels. Alrighty, let's have a look at ES. So we'll come back, it will alert us. Okay, so ES on the daily chart looks basically exactly the same as the Nasdaq. So it also broke into bullish market structure on the daily chart. It has the imbalance right here. And then we have these relative equal highs. So we have buy side liquidity being built up above these highs. Okay, and this was the little fair value gap that it came back to rebalance. Yes, that's a bigger fair value gap than the Nasdaq. The Nasdaq has this small little one you could barely see. Here it's more apparent. See, so ES also took the previous day's low. Let's just quickly put the previous day's high on the chart as well. Previous day high. You see the Nasdaq has been printing a lot cleaner price action. So if we go back here, you can see this gave us the imbalance this morning, which was a pretty clear draw on liquidity, and you can see price action came right to it. But on ES, you didn't get any fair value gap. It's just everything traded efficiently. But that also come for this low during when the CPI data came out. So the market makers bought up any sell stops below this low, and then you can see that by the strong movement to the upside. Okay, so ES already broke through the fair value gap. So this could become an inversion fair value gap. So this could act as a type of support. Looks like the 1 hour needs to cool off. Everything is overextended. Okay, so it's also struggling right here at this imbalance. See how accurate this is. Exactly. Just couldn't get past that. But I still think this is going to be or inducing liquidity above these highs. So there's relative equal lows right here. So right now, but this could obviously change within the next 30 minutes or so. But I think they might bring it down to just knock out the liquidity below these relative equal lows before displacing to the upside, and then we'll get our entry on a retrace on one of these smaller time frames. Quickly go back to the 15. So generally when you have these relative equal lows and an imbalance in the same area, then it's very likely that price will come into it, and then we'll wait for that displacement to the upside. If it prints a fair value gap on one of these lower term time frames with the market structure shift, my favorite time frame to use for that is the 2 minute. Then we just enter on a discount fair value gap, and then the ultimate target is going to be the previous day high. So let's just, for argument's sake, say we enter somewhere around there. Not the biggest gains, about 18 points, 22 to that high. And I could just also start to run towards these highs. We'll have to see. There's also, didn't notice this before. You also have that imbalance right there. Alright, that's kind of what I see for the Dixie ES1 and the Nasdaq. Have a quick look at Bitcoin. Okay, so we nailed this move in the Discord. We called this little pump into the fair value gap and then dump towards the sell side liquidity. So that played out very well. So you can see right here, this almost looks like a trend line, right? So a lot of people will see this as strong support. So you can see they just brought it in, knock out all of the sell side stops or sell stops, and then it displays to the upside. And we know this is displacement because it left the fair value gap right there. And it looks like they just, I thought they would bring it back to this fair value gap before seeing a move to the upside. But it looks like they just brought it to the order block and then started to move. But it is looks like it's making a lower high. I thought it would retrace into this area and then move to the upside, because we still have a unclaimed imbalance right there. It does look like Bitcoin with this little leg up looks like it wants to go into this area right here, and this is at the lower end. You can basically call this 27k. Have a look at. Okay, it looks like this will have to cool down. So look at the 1 hour. Okay, so on the 1 hour, we were making lower highs. Now we're just kind of making higher highs. Some wicks right there. Might still retrace back into this area, let the 1 hour reset. But I think it is ultimately going for this imbalance right here at 27k. And once we get there, we'll see how we react from this level. If we, for instance, on the 5-minute break market structure with displacement, then it's likely that we are going back down again. But we'll analyze that level once we get there. But I think that is going to be kind of your drawn liquidity for Bitcoin in the coming days, is moving towards that 27k area. Alrighty, I think that is all of the analysis. So, all right. So for CryptoCat, I promised him that I will kind of run through my day trading technique and the checklist. So let's quickly go through the checklist first. So the number one thing is it must be in a kill zone. So for index futures, the kill zone is in between 8:30 and about 11. That is New York or Eastern Standard Time. That's for the afternoon or the morning session. Then for the afternoon session, that is from 1:30 to 4. I say like until, if I'm going to be taking a trade, it's going to be between 1:30 and 3. And then I want to be out by 4 o'clock. And then the next one is a bit of a gray area, the daily bias. I'm just going to make this gray, because sometimes the daily kind of conveys a move to the upside, but then when you go into the lower term time frames during the kill zone, then a pretty good short presents itself. Then you don't want to miss that opportunity. But what I typically do is, if the daily conveys a move to the upside, for instance, and during the kill zone a pretty good short setup presents itself on the lower term time frame, then I will just go in with half the amount of contracts that I would have for the long. So that's basically how I handle that. All right, so now we are getting to the price action. So it must take out a liquidity pool. So liquidity pool. So the buy side liquidity is above highs. So that is where people that go short put their stop losses. That is buy stop liquidity. It's called buy stops because they have to buy back to cover their short positions. And below lows is the sell side liquidity, because people that went long, they have to sell to cover their long positions. So that's just the terminology if you didn't know. So what I want to see is, and for this, to mark off the liquidity pools for like intraday trading, I normally use the 1 hour and the 15 minute. So then you just mark off for instance, your highs on the 1 hour and the 15 minute. And that's all that I use those higher term time frames for, is just to mark off the liquidity pools. And then I just basically wait for price to trade into that area, right? So people that were short in the market, they had their stops above the resistance, right? So that's where they would see is a safe area for their stop losses, is right above resistance. So now price action comes, it knocks them out. The bigger players will then buy all of those stops, and that is what we wait for. And normally you will see displacement to the downside that takes out the previous higher low, and then that displacement will create a fair value gap. So the fair value gap is what tells you that there is displacement. And ideally, if you go short, okay, something's happening. Okay, we'll get back to this. Okay, we'll come back to this. The kill zone is not started yet, so I'm not gonna. We'll come back to this. I'll keep an eye on this on my other screen. Okay, so where is that drawing? There we go. Okay, so like we said, moves up into a liquidity pool. So these pools are highs that you are gonna identify on your 1 hour or 15-minute chart. You wait for price to move into it and then displace to the downside. This is your indication that the larger players are buying up these stop losses. And then with this leg down, you want to see the fair value gap. So this I do on the 5-minute, 4-minute, 3-minute, 2-minute, or 1-minute, with the 2-minute being my favorite time frame to use. So as soon as we get into this area, then you can start to go in between the 5-minute, the 4-minute, 3, 2, and 1, and you look for the market structure shift with the fair value gap. And if you want to go short, you want to see this fair value gap in a premium, so above the equilibrium. So what I a lot of times what I do is, if you see the fair value gap below the equilibrium, then you can just kind of enter on the equilibrium or the Fibonacci 618, and your stop will go there. So this will be according to your risk parameters where you want to enter. Just be mindful, if you put it at the 618 or the OTE level, you might not get an entry. So just keep that in mind. So I just, if the fair value gap is here, I don't like entering here because my stop needs to go there, then it's just too much risk. So going back to the checklist, take out the liquidity pool, market structure shift on the lower term time frame, displacement. So displacement, if the leg down creates a fair value gap, then you know that is displacement, and you want to see it take out the old higher low. Fair value gap in discount or premium, depending if you're going long to short. And TP1 must be a 2-to-1 risk to reward ratio. And then kind of what I do is, this is the journal side. So any notes that I need to make, I make it in here, and then I log all of my trades, and then I put screenshots here, right? Let's say just when I entered, I'll take a screenshot, I'll pop it in here, and then at the TP or stop loss, then I'll just paste the next one right here, and then I have a log of all my trades, which is pretty important because that's how you see if you need to improve, is your strategy working. So those things are pretty important, the journaling side of things. All right, let's quickly go back to what's going on the NAS. See, so we had these relative equal highs. We're not displacing above it, so they might just be knocking out liquidity. So if we now get displacement below the most recent higher low, then we have a short brewing. We'll see how this plays out. Kill zone starts in about 10 minutes. The silver bullet time window starts in about 40 minutes. Oh, okay. Let's quickly have a look. I forgot to have a look at the Forex factory. Okay, so today we obviously had that CPI data coming out. They smashed it right into the sell side liquidity, then reversed it. Tomorrow, at the same time, we have more red folder news coming out for PPI at 8:30. And then at 10, that is just low impact news, so we don't have to worry about that too much. And then again on Friday, we have more red folder news at 8:30 and then at 10 a.m. as well. So tomorrow again, what I did today was I just observed the charts when the CPI came out, observed the open, and only after 10 o'clock, that is when I opened my first trade. And this happens almost every day. Quickly show you. Okay, so the open was right there. We go to the 2 minute. Okay, so on the 15 minute, right, before we go back to the lower term time frame, equal highs, so buy stops above, and then normally at the open they run it into liquidity, and that move normally happens till about more or less until 10 o'clock, and then they reverse it, just like you see there. Just trying to remember where that silver bullet, today's silver bullet was pretty sketchy. It still worked. So this is what I'm gonna do tomorrow as well. My first trade is gonna be right after 10 o'clock. So let this madness happen. Wait to see what the open does, and then normally after the open they reverse it at normally about 10 o'clock. So today's silver bullet was this little fair value gap right here, and the idea is that you buy this fair value gap or short this fair value gap, and you run it towards the first closing liquidity pool, which was just this one right here. So it wasn't huge, but I entered right there and I sold right there, and I think that was about just in the Discord. I think at the end of the day it was about 20 points. Just that small little move was 20 points. Yep. I sold just underneath that. Just kind of digging into the liquidity. Quick little in and out. If you can do this once or twice every day, there's 3 silver bullets. The one at 3 a.m. during the London session, 10 a.m. and then again at 2 p.m. in the afternoon. All right, I forgot we have load shedding in South Africa, and I have to, when the power goes off, I have to manually switch over to the backup power, and that's gonna happen in about 25 minutes. All right, so I think what I'll do is when the silver bullet starts, I'll send out a notification in the Discord, and then I think we'll do a live session in the Discord for the silver bullet. If you're not in the Discord, definitely grab the link in the description, and then I will see you guys there. Right, and then with that being said, thank you guys very much for tuning in today. I will be back tomorrow at around the same time for some more live analysis. And with that being said, thank you guys very much and cheers.